Hello everyone and welcome to our next technical analysis review for the Euro US dollar pair. Today is September 12th, 2012 and we are currently looking at price action on the 10-minute chart. And as you can see, the pair had extended its gains higher for another day on risk appetite, and there was this rally in the pair due to the news from early this morning about the Constitutional Court in Germany approving for the ratification of the ESM, and they're going to do this with minor conditions attached to it. So this news of them refusing to block the Bailout Fund improved risk sentiment in the market, and we saw the Euro US dollar pair rally 122 pips for today from the session low here at 28.15 all the way up to the session high here at 29.37, where it found resistance for the day. But this area up here, of course, was also where our 61.8% Fibonacci retracement level was located from our major leg down on our daily chart. Now, if I was to go to our daily chart, you can see that this movement lower, this drop from our March 1st high, this was actually our 2012 high at 34.86, down towards our 2012 low here at 2042 is what formed the 61.8% Fibonacci retracement level. And we can see that on today, this level served as resistance for our pair. So then let's go back to the 10-minute chart. So you can see that from this resistance, the pair began to retrace, and we begin to see this pullback in the trend as offers to go short began to come into the market, and we saw the pair fall and find support near our 100 simple moving average. But this was not only where our 100 simple moving average was located. If we were to draw a Fibonacci retracement of today's trading range from the session high here at 29.37 down to the session low here at 28.15, you can see that this area of support was not only where our 100 simple moving average was located, but it was also where our 50% Fibonacci retracement level was located. So then we see this area of confluence here, which strongly supported it as a strong support. So then, of course, going on further in the day, you can see how the market failed to break through this level. We began to see it consolidate for most of the New York trading session, and it's consolidating and trading within a tight range underneath the 2900 handle, awaiting the breakout during the next trading session. So if I were looking for an opportunity to actually go long on this rally and buy the Euro US dollar pair, I would have done so when price had fallen to a known area of support. And a known area of support would have been when the price fell upon the announcement of the Constitutional Court. It fell sharply and found support at 28.15, which was our session low. Now, let me go to the 30-minute chart so I can show you that at this 28.15 level, if you use the glance to the left, you can see that on two occasions, once on the 11th and another one on last Friday, that this 28.15 level served as resistance. So then what was formerly resistance, once broken through, has become support for us on today. So then this actually at this area at 28.15 would have been a good area to actually buy the pair upon bullish confirmation. And this was also where our 100 simple moving average was located. So then we see even more confluence here with our 100 simple moving average. So then let me go back to, let's see, our 5-minute chart. So then you can see that price had fallen sharply to that level during the German court's announcement, and there was a pickup in volatility. And if we would have entered immediately at 28.15, there was a possibility that we could have been stopped out if the price of the pair had continued to fall. So then I wouldn't have entered immediately. There was also no clear evidence or no clear signs of the movement possibly reversing at that particular moment where price was at these lows. So then what I would have done, I would have waited for price to show signs of bullish momentum or conviction and enter the price much higher. So then what I would have done, I would have entered a buy order at 28.43. Upon bullish confirmation, I would have actually placed my stop loss at 28.13 below this support here. and held onto the trade and took profit when price had reached the 2900 psychological level for about 57 pips. So then that was one trade that you could have entered right after the German court announcement. But if you was looking for another opportunity to re-enter the market, you could have done so on this brief pullback towards support at 28.82. If you glance to the left, you can see on two occasions this area around 22.82 served as resistance for the pair. So then, of course, if you were in front of your platform at this time, you could have placed a buy order upon bullish confirmation at 28.88. Place your stop loss at 28.80 right here, and took profit when price had reached the 2900 psychological level for about 12 pips. Or you could have been a little bit more risky and aggressive with your trading and took profit when price had reached this 61.8% Fibonacci retracement level for about 45 pips. So then right now you can see that the pair is currently consolidating ahead of the FOMC decision, and we may continue to see this range bound activity until the announcement on tomorrow. So if the Fed does announce another round of quantitative easing, then we will see more dollar weakness and a breakout to the upside. So we will see the pair extend its gains higher. But if the Fed underdelivers on tomorrow's announcement, then we will see a very strong boost or increase in the dollar, and the Euro US dollar pair would break to the downside. So then, of course, that's what we can expect for tomorrow. That to happen. But that's it for my technical analysis review for today, and I will be talking to you guys later. You guys have a wonderful day. Okay, then, bye.